My name is Stephanie Rankle, and I'll be giving a presentation about AI in finance, the key players in enhancing risk management, detecting fraudulent activities, and regulating advanced algorithms for improved trading and operational efficiency. The key players are Microsoft, BlackRock, Goldman Sachs, JP Morgan. Microsoft, under the leadership of Bill Gates, has become a pioneer in AI-powered data management. The company aims to expand its ecosystem into the essential frameworks and infrastructures needed for AI. Microsoft's Azure cloud data centers use hardware and chips from NVIDIA, AMD, and Intel. The company has established partnerships with BlackRock, Global Infrastructures, to obtain a $30 billion initial AI investment. They have access to financing if they need additional capital, but this would make it one of the biggest, largest alternative investments ever. JP Morgan Chase reports a total assets of $3 trillion, while Goldman Sachs holds about $1 trillion in assets. Both these are key players in the execution of AI products. Goldman Sachs primarily focuses on investment banking and wealth management, whereas JP Morgan offers a wider spectrum of services encompassing retail banking, investment banking, asset management, and commercial banking. There are some risks and challenges as well as improvements with AI. Emerging neurosymbolic AI addresses key challenges by integrating the pattern recognition capabilities of neural networks with the transparency and logic of symbolic reasoning systems. For example, these technologies can map banks' anti-money laundering controls directly to financial action task force requirements, benchmark them against industry standards, identify compliance gaps, issue targeted alerts when regulating risk increase, and provide recommendations linked to specific regulatory clauses. So some of the challenges that businesses are facing is like data silos, where there's disconnection between where they're keeping their data now, like on Excel spreadsheets, and finding resources like Microsoft tools are providing to integrate several platforms into one software. Also, providing protection and security for leaks. Some applications of generative AI in financial services are conversational finance. These are the chat box, voice assistants that can perform financial tasks and transactions. Financial analysis, AI can assist in analyzing financial data and information at scale and in real time. It uses large language models to produce insights and recommend strategies to compare against benchmarks. Synthetic data generation can inform and improve financial models and ensure compliance with data privacy regulations. So again, like the challenges are integration of data into AI-powered softwares like Microsoft has produced. Some of it's education, not having enough educated people to use these softwares to provide benefits or, returns for their company. Notable technologies include Microsoft Fabric, which is trying to get the isolated silos into one database, combining several databases. They have features such as Data Factory, Data Engineering, Data Warehouse, Real-Time Analytics, Power BI, Data Activator. They also have AI assisted onboarding. So Microsoft has positioned themselves to fully partake in all of the infrastructures, software in this current tech competition. Microsoft enables financial institutions to leverage AI for improved decision making and real-time analysis. Fabric integrates technologies like Azure Data Factory, Azure Synapse Analytics, and Power BI into a single unified product, empowering data and business professionals alike to unlock the potential of their data using this product. Again, Microsoft has positioned themselves to take advantage of the entire AI data value chain, from AI computing hardware to supporting infrastructure to AI cloud services. By managing both infrastructure and software, Microsoft can adjust its AI solutions for performance, cost, and scalability. Its vertical integration from infrastructure to operating software enables more control over the AI value chain and supports development in AI products and services. Microsoft reports that it maintains its leadership in a competitive position in the technology industry, particularly as an AI provider in infrastructure and software integration, customer support, and the entire value chain. Accurate and regulated data is an important foundation for financial services, where Microsoft can integrate analytics and AI-driven decision-making models. When it comes to improved trading and operational efficiency, with the use of AI solutions, financial institutions have access to platforms that assist in risk management, opportunity identification, and focused portfolio analysis to generate insights. For example, by comparing performance to peers and market indicators, which lead to larger ROIs and expand their market presence. These tools facilitate faster processes and support broader investment strategies by identifying underperforming assets within portfolios, and they help firms expand by strengthening risk controls and responding to low performers. So I have a couple of diagrams that pretty much list different, features. Benefits of AI in banking and finance. They can reduce costs and risks. They can improve customer experience. They can improve fraudulent detection and comply with regulations. Portfolio optimization, algorithmic trading, fraud detection, synthetic data generation, intelligent credit scoring. So as you can see, generative AI in finance has a lot to offer to improve efficiency. Artificial intelligence is set to reshape how industries operate, optimize workflows, and make strategic decisions. Trust is becoming an increasingly crucial factor which may influence the adoption of AI technologies throughout the financial sector. AI models such as neurosymbolic AI are used by firms seeking to manage both risk and opportunity, while robo-chatbots are used as a substitute for basic advice and Q&A. KPMG Global AI and Finance reports in 2024 that they did a study that highlights the rapid adoption of AI across corporate finance functions, including accounting, financial planning, treasury management, risk management, and tax management. The report indicates that 71% of companies surveyed are using AI within finance operations, with 41% implementing it to a moderate or large degree. This underscores AI's transformative role in enhancing operational efficiency and decision-making in the financial sector. I've added a picture that predicts like exponential growth in AI and the banking market using natural language processing, computer vision, predictive analysis, and they're predicting the market will grow at the rate of 32.7% by, I think it was 2032. Regulation of this new technology will become very important, also in the advancement of algorithms. Regulations have been enacted to oversee artificial intelligence and machine learning to manage related risks. As technology advances, rules concerning blockchain algorithms and high-frequency trading will reflect the algorithmic accountability and transparency. AI ethics include security, responsibility, safety, bias and fairness, and transparency. Algorithmic trading was legalized in 1998, establishing legal frameworks for sophisticated trading strategies. In January 2019, the enactment of the Algorithmic Accountability Act marked the introduction of the first comprehensive regulation in the United States. The National Artificial Intelligence Initiative Act defines AI as a machine-based system that can, for a given set of human-defined objectives, make predictions, recommendations, whether real or in virtual environments. On January 23, 2025, Executive Order 14179, removing barriers to American leadership in artificial intelligence. This strategy seeks to remain globally competitive by minimizing restrictions on AI and avoiding protectionist legislation. Notably, it is important to maintain a balance between profit sharing and the security of customer and government data. So even though we have all of these benefits, like risk management, stock market predictions, sales forecasting, trading, the government seems to have positioned themselves to pretty much monopolize from their position. It seems a little more prioritized than necessarily the safety of the data from what I'm seeing so far. This slide illustrates how many regulations have been passed since 2016 to 2023. There have been 25, and AI regulation progress globally. You can see most of the world's in light green to dark green. with, looks like the EU, Britain, China, Saudi Arabia are a comprehensive regulation, while America, Russia are an active deployment. So you can see most of the world is, already in the arena of trying to create the right regulations for AI success. Detecting fraudulent activities, JP Morgan, a co-owner of Zelle alongside Bank of America, has recently faced scrutiny concerning scams associated with the Zelle platform. The application's developers have attributed the need for enhanced protection primarily to insufficient financial support for law enforcement rather than a lack of their app's security features. Forbes magazine says payment interruptions can be minimized, false positives reduced, and actual threats addressed quickly using Edge AI. These initiatives enhance customer trust by reinforcing cybersecurity practices and protecting assets. The firm also places significant responsibility on customers to practice effective password management, enable two-factor authentication, encrypt data in case your device is stolen. So they pretty much push back onto the consumer that they need to be doing a certain level of security and protection of their passwords and devices. Zelle also said that it's law enforcement not doing enough. It's not that their app isn't producing enough security or not having enough features. They were, pursuing a lawsuit with CFPB, and apparently they backed down their case on Zelle. In conclusion, addressing the expenses involved in integrating fragmented infrastructure and dispersed data silos is important, as these issues can affect both efficiency and innovation. While system integration presents complexities, successful implementation may enhance operational performance. Organizations including Microsoft, Goldman Sachs, and JP Morgan are adopting AI to develop financial services with increased efficiency and security. The planning and implementation of long-term strategies focused on risk management, fraud prevention, customer experience enhancement, process optimization, and improved decision-making are considered important for ongoing operations. Additionally, meeting global data privacy regulations introduces further complexity when deploying large-scale AI solutions. AI's role in finance will continue to expand, supported by innovations in cloud computing, blockchain, and quantum computing. AI offers vast opportunities for improving financial products and services. Its evolution will depend on policy development, investments of infrastructure, and ongoing innovation. Financial institutions must navigate the challenges of ethical AI, data privacy, algorithmic accountability to fully leverage AI's potential and ensure a sustainable, inclusive financial ecosystem.